Welcome to Revolutionary Ideas. I'm Jim Kunkel, host of the Digital Revolution podcast, and over the next series of videos, I'll be exploring the Digital Dollar Project, exploring a United States central bank digital currency. This groundbreaking report was authored and distributed by the Digital Dollar Foundation and Accenture. Report link is in the video description. In part 1, I provided a background on the Digital Dollar Project and its partnership between the Digital Dollar Foundation and Accenture. Before I start out this part 2, let me revisit what the Digital Dollar Project is. The Digital Dollar Project is an initiative to explore the potential of creating a digital version of the US dollar, which would be a form of central bank digital currency, or CBDC. A digital dollar would be a virtual representation of the physical cash you carry in your wallet, but it would be issued and managed by the Federal Reserve or another newly proposed government entity. The Digital Dollar Project is a partnership between Accenture and Digital Dollar Foundation, and it aims to advance the research and development of a potential U.S. CBDC and to engage with the public and policymakers to introduce this topic and open discussion on digitally transforming the United States paper and coin fiat monetary system into a central bank digital currency, or CBDC as it's referred to. Now let's get into this part 2 and talk about the enablement of the US CBDC, which is tokenization. Tokenization is a process that has different meanings in different contexts. In natural language processing, tokenization is the process of breaking down text into smaller units such as words or characters that can be analyzed by machines. In data security, tokenization is the process of replacing sensitive data with non-sensitive equivalents called tokens that have no intrinsic or exploitable value. In blockchain and cryptocurrency, tokenization is the process of creating digital assets called tokens that represent various items such as physical assets, financial assets, or identity and data. Tokenization is a way of digitizing and securing information, enabling new forms of exchange and analysis. As I mentioned earlier, tokenization is a way of creating digital representations of value that can be transferred and exchanged on a ledger. Central bank digital currency, CBDC, being a form of tokenized central bank money that can be used for payments, settlements, and other functions, relies on tokenization. CBDC can leverage the advantages of blockchain technology, such as security, transparency, efficiency, and programmability. CBDC can also enhance financial inclusion, monetary sovereignty, and also resilience of the payment system. Different types of CBDC can have different design features such as token-based or account-based, wholesale or retail, and centralized or decentralized. This is why CBDC has been an active area of research and experimentation for many central banks around the world. Tokenization is one of the best ways of creating digital representations of value that can be transferred and exchanged on a ledger. Tokenization improves the security, efficiency, and transparency of payment and financial transactions, as well as enabling new forms of innovation and inclusion. Some of the benefits of tokenization are: it reduces the risk of fraud and data breaches by replacing sensitive information with non-sensitive tokens that have no value. It lowers the transaction cost and barriers to entry by eliminating intermediaries and also enabling peer-to-peer exchange. It enhances the liquidity and accessibility of assets by enabling fractional ownership and global distribution. And it enables programmability and automation of transactions by using smart contracts and blockchain technology. Tokenization of U.S. central bank digital currency is a complex and evolving topic that involves various technical, economic, and regulatory challenges. Some of the possible concerns are Privacy and security. Tokenization could expose sensitive information about users' financial transactions and their identities, and create new risk of cyber attacks, fraud, and theft. Interoperability and compatibility. Tokenization could require new standards and protocols to ensure seamless and efficient exchange of CBDC tokens across different platforms, systems, and jurisdictions. And financial stability and inclusion. Tokenization could affect the role and functions of the central bank, commercial banks, and other financial intermediaries, and have implications for monetary policy, credit creation, and financial access. In the next part of the Digital Dollar Project, I'll cover the privacy considerations related to the proposed central bank digital currency in America. Please give this video a like if you found value on this topic, and also consider subscribing to the Digital Revolution channel if you're not. Subscribers, I greatly appreciate your support of the channel content.